Alright guys, hello and welcome to this video. So, we're gonna do a complete breakdown of the US economy and the US dollar now. And I think this is the most important. Every bit of fundamental analysis should really start with the US dollar, because the US dollar, the US economy drives the global markets. If you know what the US dollar is doing, you most likely know what most other asset classes and foreign exchange pairs are doing. So I always start with the US dollar. And in this video, we're gonna break it down from top to bottom. And I'm going to try help you understand why the US dollar has been trending upwards with a lot of strength since the start of 2024. All right. So I'm also gonna look at the technicals as well. But let's start with looking at the chart right here. So let's just start looking at the chart quickly and let's see 2024. Look at what we've done. We've trended up really strongly. So I think we've gone up, let's see, from top to bottom. Yeah, about 3.8%, which is obviously a lot for the Dixie in a pretty short space of time. So pretty strong uptrend. Now the question is, why is this happening? And let's get into that, because it's all to do with the fundamental data. All right, so we're gonna break this down as simple as we can. So let's look at the fundamental data starting from January the 1st. Now I've just gone to Forex Factory here and I've only put in red folder news. And we're gonna start over here. So the first thing I'm gonna show you right here is this data over here. So this over here is NFP, right? So if you look at NFP, you will see that January the 5th, we had some strong NFP data. We had average hourly earnings coming out above expectations. We had NFP employment change above forecast and also above previous. So that is strong labor market data. That's very strong data. Okay, so that's the first thing to know. If I just get off this, come over to, I'm gonna keep notes in this in here, right? So we can just track it. So strong labor market data, right? Early Jan. Next, let's see what we got. So moving along, we have Thursday, January 11th, CPI. This is inflation data. And what did we get? We got inflation data coming out above. So CPI month over month came out above the forecast, and CPI year over year came out also above the forecast. 3.4% v 3.2%. Now, if you look at the graph in here, you will see that we have remained stuck at about 3.4%. So that is another very important thing to note. So again, let's take note of that. So CPI, don't know why it's doing that. CPI stuck at roughly 3%. I'll just put in 3%. Now note, that's not the 2% Fed target, not at 2% Fed target, right? All right, so that's the second thing to note. Now, let's see the following. So moving on from that, we also have this core PPI data that actually came out less than expected, but that is not as important really as CPI. It's less looked at, still important, but not quite as important. Moving along to middle of January, kind of the third week in January. And what else do we have? The critical data point to look at in here is the core retail sales. So with the core retail sales, again, we got really strong data above the forecast and above the previous readings, right? And if you look at the graphs in here, you will see that the core retail sales, this is month over month, you will see that we're starting to tick up quite nicely. So again, some strong core retail sales, okay? So we'll take note of that. Strong retail sales. All right. So what I'm going to do, just as a quick side note, I'm going to take all this data and I'm going to simplify it at the end to create a fundamental bias and to really show you why the US dollar is going long. And then we're going to forecast out. All right. So next, we'll just quickly run through these. Flash manufacturing PMI and flash services PMI. Again, as you can see, strong data. Above forecast and above the previous, in growth territory, and the exact same with advanced GDP Q over Q. Above forecast and, okay, below the previous, but still well above forecast. So again, just strong data. So I'll take note of that. So we got strong PMI readings, PMI readings and GDP. All right, so 5. Let's see here, core PC as expected, which is actually quite an important metric, but it's at expected. It's not decreasing, which the Fed want to see. They want to see that inflation cooling. And then we move along to this. This is right at the end. So this is obviously recent data. And the key thing to note from here is, all right, again, some strong numbers with consumer confidence and jobs JOLTS data. And then the big one, FOMC. So we had rates come out as expected, but the key thing to note was in the press conference because we had a hawkish tone from the Fed, right? So again, that's another critical point to note, hawkish Fed tone. And if you don't know what hawkish means, it basically means that they want to keep interest rates higher for longer, right? That's a simple way to explain it. Next, we have, this is the most recent data point. So, and then we're done with looking at all this data. We had the labor market data. So that's average hourly earnings, NFP, and employment rate. And as you can see, look at how positive that data is. 0.6% above the forecast, 353K, well above the forecast and above the previous, and unemployment rate dropping, right? This is really, really positive data. Look at the average hourly earnings. If you come right into recent times, that's a really nice kick up from the previous data. So again, 6, strong NFP data, right? So these, if you look at the data since in the previous month, we've had strong labor market data, steep CPI stuck at around 3%, not cooling to the Fed's target, strong retail sales, strong GDP, PMI readings, a hawkish Fed tone, and strong NFP data. This is basically very, very bullish for the US dollar, and it reflects in the price action. All of this data over here has basically translated into price action in January, right? Into strong US dollar, all right? Now, the question from here is, if you're confused as to why, so I'll just break it down as to why this has actually created a strong US dollar. And the reason being is because with a strong, despite interest rates being at 5.5%, we are seeing a strong economy, strong labor market, strong everything, right? Yet CPI is not at the Fed's 2% target. So that means that interest rates will have to remain higher for longer. So we have this kind of storm where I'll just write it out right here. We have high interest rates. We have high interest rates, strong economy, inflation not at target, right? These are the three main points to note. So we have high interest rates, a strong economy, and inflation not a target. So what does that mean? That means that the Fed are not going to decrease interest rates, because why would they? They have the economy is remaining resilient and inflation is not at the target. And with the economy remaining strong, that means inflation is going to be harder to get that inflation down to their target. And if they drop rates too quickly, they risk bringing back inflation, right? So they're in this area where they have to keep rates high. It's not a bad area at all. It means they've actually successfully managed to raise rates without completely destroying the economy, right? So it's actually quite impressive, really. So this is the perfect storm that has allowed the US economy, or the US dollar, to remain really, really strong. So I'll just delete this, and now we're going to finish this video off, right? So the next question is, where's the US dollar headed, right? And because it's all good and well looking at this historical data, this data we've got at the last month, but where is the US dollar headed? And that is obviously always the million-dollar question. But if you look at all this data and everything we've just said, taking in everything to account and now forecasting out into the future, we have to see, the real question is, where are interest rates headed? Do we think they're going to stay higher for longer, or are we going to see shifts in data and we're going to see them actually drop rates sooner? The question is going to be all around CPI, and not just CPI, inflation data. Because if we do see inflation dropping and we see the economy cool, then we're going to see those rates drop, because it'll give the Fed the perfect scenario to drop rates. However, if we see CPI remain kind of stuck at this 3% level or tick up, and we see the data continue to come in strong, we're just going to keep seeing the Dixie. Let me just move this here. We're going to keep seeing the Dixie just trend higher and higher until we see the economy cool slightly and inflation coming closer to target. I believe we're going to continue to see this trend. And for that reason, I'm remaining bullish on the US dollar for the medium term, for sure. Definitely remaining very bullish until we see this shift. The economy needs to start to cool. Inflation needs to get close to that 2% target. And then we will see the interest rates begin to drop, and we'll see that shift, right? So that is basically the complete breakdown. And simply put, US dollar is going to continue this trend until the data shifts. And it seems unlikely it's going to shift anytime soon. So with that being said, what pairs can we look to trade from here? Now, basically, the way to think about it is you want to be short XXX USD and long USD XXX, right? So you want to be short, say, Euro US dollar and long USD JPY. Obviously, you want to handpick what you're going to trade it against. But what I will be looking to trade, and what I have been trading, is pairs. I'm looking to go short on pairs such as Euro US dollar. Looking for things like this. Continuations down. And I'm looking to long things such as USD JPY. Again, these are all trades that I've actually actively looked for and actively taken. So you're looking for trades exactly like this. So this is a trade I took, but let's get that out of the way. But from here, so that's a trade I took, but from here, what we can look at is things such as this, continuations up. So anyway, that is the complete breakdown of the US dollar. I hope this video helps you understand. I hope it simplifies down the way I look at the fundamentals and how simple you can actually make it by looking at past data to then inform you about where the economy is headed, where the monetary policy is headed, and then to make informed trading decisions based off of that data. So anyways, I'll cut the video there. Thank you very much for watching.